In this video, I'm going to explain to you the reason fundraising is not getting any easier. We are verging around the corner of the end of 2024, and recently there was a Fed rate cut, and everybody got excited. But you can't get excited if you're raising early stage funding, pre seed or seed. It is not time to get excited. It is not time to think. We're going to go back to the glory days, and I'm going to explain exactly the reason why and what you should do about it in this video. Before we continue, my name is Ed Kang, 7-time funded founder with 2 exits. That's just a fancy way of saying I've failed a bunch of times, and I'm here to use this channel and these videos to help you avoid some of the catastrophic mistakes that I've made. Not to say you're not going to make mistakes, but I'm going to try to make your life a little bit easier, especially if you're raising early stage funding, pre-seed to seed. I'm also the Chief Strategy Officer for Startups.com, and I've raised over $100 million for my startups, other startups, as well as startup funds, as well as working with a team that's raised over $750 million over at Startups.com. We know what we're talking about. I've been through at least 3 of these cycles, and I want to explain to you what you should be thinking and what you should expect if you're an early stage founder. While you're here, you might as well give this video a like, comment, subscribe. That's always helpful. Let me know what you think. If you're part of the Startups.com community, thank you so much for your support. Looking forward to spending time with you as your advisor. Let's jump into this video. There are 5 reasons that you cannot get excited about fundraising just yet. It's still hard because I'm letting you know right now, I have talked to professional fundraisers, general partners, investor relations people, and they are saying that it is the hardest it's been in 25 years. I've talked to founders who have raised hundreds of millions of dollars, done 15 funded startups, 6 exits, and they're telling me, Ed, it has never been this hard. And I'm going to say absolutely. And one of the reasons is there's an expectation that was set in 2021, 2022. That's when the bubble burst. And everybody's thinking we're going to go back to those days. We just aren't. There are 5 factors that I want you to take into consideration when it comes to fundraising for your startup. The first factor is the recession. The second is there are no startup IPOs, not yet anyway. The third is there's an AI funding bubble. Then we're never going back to 2021. I've talked about this just recently. And there's more competition from AI startups than ever before. We are not going back to 2021, like I'm saying. And these are the things that you want to think about before you start fundraising. Or if you're in fundraising right now, we're in 2024. You want to hunker down and get ready to take your shot in 2025. There are some things that you can do right now. Let's talk about the recession first. Even though that we're talking about a Fed rate cut, we are not out of the woods yet. If you look at all the economic signals, even though it's an election year, nobody wants to talk about recession, but there is a recession going on and it could hit us pretty hard. And when you've got a recession going on, that means investors are going to be tight with their capital. They're going to be looking to park it into safe places. And this alternative asset class of venture capital in startups is just not going to be on their minds. We have seen high net worth individuals, angel investors, run for the hills. There is 72% less capital, or 66%, depending which data that you're looking at, in the market right now. General partners are saying our funds aren't reloading. People aren't putting money into our investment funds. The LPs aren't. And that's going to affect every investor, crowdfunding investors, your rich aunt and uncle. They're all going to be thinking, wait a second, why would I want to invest in a risky startup when there could be doom and gloom? So everyone's going to hoard cash. The good news is they're going to hoard cash, and that cash is going to be there when things start to open up. And if you look at the economic history and the data, if you put money into the NASDAQ, into the stock market, you would have made way more money because all startups have been losing for the past few years. We are at the bottom. Not to say there isn't money to be made, but most investors are not thinking about startups right now. What has to occur? Well, the next thing is there has to be an IPO, and nothing is happening as far as IPOs are concerned. The last one I remember was Klaviyo. I haven't really been checking because it just hasn't hit the news. When the IPOs start and we're looking for the next generation of companies, probably an AI company, some company along those lines is going to go public and people are going to start making money, and then investors are going to think, wait a second, I could be getting big returns investing in startups that are about to go public. When is that going to happen? I don't know yet. I don't keep my ear to the ground enough to know when the next IPOs are. I know some are percolating, but we need to see a string of IPOs IPOs not just go public, but also do well for investors. And right now, all the IPOs that have been happening since 2021 are all underwater. Go check them out. And that is a bad signal, which means there's still going to be headwinds. There's going to be friction when it comes to raising capital. Now let's get to the AI funding bubble. If you are an investor and you are running a fund and you are not betting on AI, generative AI, large language models, then nobody's going to trust you with their capital, because the winner of that AI race is going to be a trillionaire, and that's going to make a lot of people rich. And then the AI companies, such as NVIDIA, that are supplying all the chips, suck all the oxygen out of the room. But every bubble bursts, and the AI bubble is going to burst because you can only put in so much money at those ridiculous valuations, 50x, 100x revenue, when there is no revenue, before that bubble bursts and that money starts to flow outwards and they start looking at other things. What other things are they looking at? They're looking at AI-driven companies. So now we've got the large language models up at the top, and then you've got all the specialized use cases, and there's going to be consolidation. All those companies are going to get gobbled up because you've got deep pockets in the upper layer, and that's where the race is going, and that's where all the money's going. So if you've got an AI company and you're doing something really special with AI, it's your time right now. But even that's getting so much harder. The talent is crazy expensive. I wouldn't even make a bet. If I was working on AI, I'd try and find something niche that people are overlooking and wait for my time. Some are saying that AI companies is the fastest depreciating asset class. If you're not in AI, you want to watch that. You're going to start to see other companies start to gain some traction. There's going to be new things coming out in the marketplace. People are going to get fascinated. I don't know what it's going to be. Maybe AR, virtual reality. Maybe they're going to have their heyday. And that's when the investment dollars are going to flow outwards from AI. And like I said, we're never going back to 2021. But I want to harp on this just a little longer. We learn our lessons. You look at .com 1.0. That's where I cut my teeth, raised a ton of money, did a whole bunch of startups, and ended up with a lot of stock options of completely useless companies, because back then it was all about getting eyeballs. It was about putting information on the internet. It was about portals. It was all those things that just didn't make any money. And then we went to Web 2.0, and that's when you start to get the Facebooks and the Googles, and social became a thing. And then it became apps. And then Web 3.0 had all these promises with blockchain and cryptocurrency and all these newfangled technologies, and AI, machine learning, really started to pop. And we started to see this swell up until 2021, 2022, and then it all burst. And what's going to happen is investors, they're going to get very savvy, and they're going to look back and say, we are never going to do that again. So if you're a founder and you've learned all your lessons watching all these startups raise money, there were founders that were like professional capital raisers back in 2021. It's not going to happen again. They're going to look at everything the same way that right now, if you talk to people and say, we have an NFT startup, they're going to go like this, and they're going to run for the hills. They're going to throw holy water at you. They're going to try and put you in sunlight. They're going to try and kill you like the vampire that you are, or try and exorcise you and call in the priest. Like, they're just going to freak out. Yet NFT technology still exists, and it's still important, and it's still being used today. It's just, it's got a different name to it. So if you're raising money like it was 2021, you're walking in there with bravado saying, oh, we're just going to raise this seed round, and we're going to go right to our A when we get this level of traction, and we're just going to grow at all costs. Investors are going to say, absolutely not, no way. That means there is a new normal. Founders have to learn the new normal right now on how to raise money. And guess what? We don't know what that new normal is. We're just getting out of the doldrums of this nuclear winter that's happened. We got some positive signals, and we're starting to see some interesting things, but we don't know. That's the reason founders, all of you out there, you have to keep learning. Pay attention. Things that were funded 2 years ago, not going to happen. I talk to founders and they say, we should have raised 2 years ago. I say, absolutely. Or they tell me, Ed, I got checks written to me and money hit the bank in 30 days. I said, when did you raise? And they go, well, back in the day. Well, we are not back in the day. You can't learn from those and carry those lessons to today unless you're willing to change, which means you're having to unlearn. And a lot of investors, a lot of founders are unlearning. And there are a whole bunch of startups right now that have been used to all that money that flooded into them when there were zero interest rates. And now they are having to learn how to survive. And it's a completely new game. Learn how to play it right now, starting now. It's an exciting time, which brings us back to more competition. There are more competitors coming to the marketplace because now you can use a large language model like OpenAI and create your own app and start testing it. You can start building from open source things, and there's so many great, fantastic projects out there, and it is easier than ever to deploy an app. It is easier than ever to stand up a SaaS and start making money. There are so many tools. competition is going to be absolutely fierce. If you don't have a contrarian bet to the market, same thing as if you're just doing a B2C consumer app. You know how many apps there are on the App Store right now? Do you know how many apps are on everybody's phone that people don't use? It's not going to happen unless you are completely different. We are looking for something that completely blows the socks off of the industry, competes with all the incumbents out there. You're contrarian. It creates new categories. The next Uber and the next Airbnb aren't going to look like Uber and Airbnb. We don't know what they look like. That's the reason so many startups fail, and that's the reason investors take all these little bets across these startups into really smart founders to say, we don't know what it looks like, but we trust you. We think you're smart enough to figure it out. So what should you do if you're an early stage founder right now? The obvious is build a great company, but how? Figure out how to do things different, get differentiated, become contrarian to the way the market is going. I have one founder. We use a software to edit all our videos, TimeBolt. Check out the description if you want a discount code. And I told him, listen, here's how you pitch your company, because it does video editing software where all the money's going into AI-driven software for AI, Gen AI. It will edit it for you. It will create all the video and all that stuff. I say, let's ignore that. Tell investors, while billions of dollars are getting pumped into there and they're competing, we have carved out a little niche that's different. We're not going to do what those AI companies are going to do. We're doing something completely different, and look at our traction. And he has thousands of users, and he's got the revenue to prove it because it hasn't worked. All the Gen AI editing tools, they are not working yet. And on top of which, all those startups that are trying to do it and they've raised money, guess who's going to come eat their lunch? Adobe. All the companies that already have editing software and already have deep pockets and stock and investors trust them, of course it's a great idea to do AI editing. So if you don't have a contrarian mindset and you're going to be doing something different than where all the money's going, you're not going to attract the money from early stage investors that you need to get going and eventually compete with all of them. There's a new approach to funding that I believe is going to get very popular. Because it's the wild, wild west and we no longer have patterns or signals, we're no longer looking for people who've been there, done that. The new approach is going to be the competent founder. As I've been sharing, if you can go to investors and say, this is my investment thesis, this is the way that I'm going to solve the problem, and I know how to figure it out, and if I run into roadblocks, here are all the contingencies that I've thought about. I'm savvy. I know things that everybody else doesn't know because I've got domain expertise. I've talked to users. I've worked on the problem before, and even though I've done it this one way, I'm going to do it another way. You want to bet on me because if it's right, if I'm right, we are going to be absolutely killer rich. Or you can just dump your money in NVIDIA and make a few points because it's already a sure bet, but you're only going to make a few points. You go to those investors and you tell them, I've got something different. I'm thinking differently. Let me show it to you and let me prove it to you by going out in the market, talking to users, building a great MVP, not necessarily a version of your product, the light version of your product, that's not going to work, but prove to them that people are tired of doing it this one way. They're not looking at it the right way, and you're going to do it this way, and that's where the big money is going to be made. Someone will make a bet on you if you want to be one of those unicorn founders, the next generation of unicorn founders that completely blow away the market, and everybody goes, we didn't see it until it made sense, and now we see it. Same way Airbnb did it, same way Uber did it. Nobody believed them in the beginning. That's going to be the next generation of founders. Hope this is helpful. Fundraising is not getting any easier. It won't for a while. We're going to need a few more years, and you're going to get a lot more videos from me before the market gets frothy enough where everyone's writing checks and going crazy and interest rates are rock bottom again and the money's flowing, the land of milk and honey, it's growing on trees. It's not going to happen for several years. And if you're a founder right here, right now, heed my advice. Check out some other videos on my channel that I've got for you, and we're going to continue having this ongoing conversation about fundraising and what you need to do to raise that early stage round. Thanks again. I'll see you in the next video.